Hello, this is Muhammad Zubair Badr from topfundmanagers.com. Today I want to introduce some quantitative solutions in the financial market, especially in commodities and in stocks and somehow in currencies as well. The logic is purely based on quantitative and mathematical. And first of thing, I want to make some basic core informations about my research in the last 14 years. The core point is that normally what's happening in market is that most of the analysts around the world, they are fundamentals or technicals. But the approach which I am asking now is purely based on quantitative and mathematical, and it's very innovative, reliable, accurate, and because the term reliability is consists of so many factors, especially risk, reward, and timing. And you can say first assumption of my research is that in the entire history of financial markets and in forever future of financial market, there would be three conditions. Those were in past and those will remain fixed, constant, and somehow you can say unchanged. Those are three conditions. One, either market will be bullish or bearish or consolidated. In the entire history of financial markets, these three conditions remain, as I said, like bullish, bearish, and consolidation. So this is the first assumption, and it's a universal truth, and none of the sensible person can ignore such information. So this is the first assumption, and there is no fourth condition in financial market in the entire history, and never it would be forever in future. So the second assumption is that forever and for a long time, it's not possible for the market to remain bullish or to remain bearish or to remain consolidation. So it's common sense, markets cannot remain forever bullish, 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 or bearish, 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 or consolidation forever. It's not possible. So the real possibility and the reality is that all these three behaviors remain balanced, somehow bearish, somehow bullish, and somehow consolidative, and market demonstrates basically the balancing and very much balanced move of all three behaviors. So this is the second universal truth of my research. And the third point is that, third is very, very important point, that first core assumption of the research is that the market have three conditions, and the second point is that market have balanced move of three conditions. The third and most important point is that the only fixed logic can comprehend this approach of three conditions of financial markets under fixed logic. When I say fixed logic, it means what actually there is no fourth condition, three conditions are fixed, and when you apply on these three, your fixed logic on these three conditions, then ultimately what you get basically risk, reward, and timing in documented form. If your fixed logic approach is correct, and there's somehow you can say reliable or true or verified, then its documented record of risk, reward, and timing is reliable. If your approach is negative and it has some errors, then you need to modify your fixed logic, and you will have to upgrade or modify or update some the basic changes in your fixed logic, and then recheck over and over and over and over the last 10 to 15 years of track record of stocks, commodities, or currencies. So ultimately, at the end, you will get reliable, documented, statistical, numerical, and mathematical form of the reports of your fixed logic or fixed strategy with certain risk, reward, and timing. What actually need to know is that you will have to consider what is the worst risk of your fixed logic in the last 10 years and what is the best possibility of rewards or profits in your fixed logic over the last 10 years are under consolidation. So this is the basic introduction of the core point of research and the fixed logic. Now most of the details can be read on my blog, like topresearch1.wordpress.com and topfundmanagers.com, and there are a lot of stuff, and any person from all over the world is warmly welcome to contact me if you have some questions related to strategy or money management or fund management, or to evaluate quantitatively the stock market, or somehow whatever the market like bond market or stock currencies or commodities market. So you're very much